Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, June 18th, 2018. I'm Frank Ochoa, aka PivotBoss. Hopefully all you dads out there had a fantastic Father's Day. Let's take a look here at the ES right now. You see the ES right here has pulled back below the midpoint of Friday's session and is driving to new lows right now. That is bearish. It's already beyond the 10-day average daily range, so we have a daily range right now of 22.75 points. That's 112% of average range of 20.25 over the last 10 days. So already we're seeing increased volatility here in terms of price range. If there's any failure to hold 27.60, we could be looking at a return trip into 27.4175. That's the previous month's high price there. Any pullback into that zone could be a buy or just below it. Now here's the deal. We have recently seen price sell off away from the 27.9175. That's the FOMC key level. It's also the upper 25% key level of the key range. Sold off away from that level. Typically speaking, you will sell off until you see rejection. Once you see rejection, price will come right back and retest that level. Here's the recent level here from March 21st. That's 27.31. Recently taken it bid for the first time. It was offered basically all year long. Recently took a bid. So taking this one offered suggests that we might have a return trip as low as 27.31. So we could be looking at lows between 27.31 and 41 here early this week, especially if price cannot hold this 27.60 here. So we could be looking at a move into that zone. I would say that given the current trajectory of this trend in this channel, any pullback into this area or even as low as the previous month's close could be an opportunity to buy, but you got to watch for signs of rejection in that case. Alright, let's take a look here at the NQ. Remember, this was the most bullish scenario. The ES was kind of the moderate scenario. YM was more bearish. If you look here at the the NQ, you can see that price has broken down below the previous session's low and is driving. Again, this one has a range right now of 71 points on the day. It's been averaging 80 points per day on a 10-day basis. So we're already at 89% of average range, and we're yet to reach the RTH open. So we could be looking at more pullback. Now here's one thing to gauge the strength of the current bull trend, or whether that strength is fading, is watching price today to see how it reacts below the 8-period moving average. Right now the 8-period moving average has been bid up big time. Every time price gets below it, it's been the low of the day, and then it's back up, back up, back up. So this is going to be very important. Does price close below that average? Because that's not typical of what you would see here in a bullish trend. We did see it here, but that was mostly a sideways range. So heading into Memorial Day. So for the most part here, if this thing starts to really pull back, how far can we go? Like the ES, we can get back to the 7,000 to 70.47 zone. That's where the breakout was in the previous month's high. And if we do, I still believe it could be a great buying opportunity given the current overall trend until proven otherwise. A failure to hold this level will open up 66.53. Alright, that's the most bullish case that's starting to turn around a little bit. And now if you take a look at the YM, this one was the most bearish case. One of our traders in our trading room, Scott, mentioned early on, hey, take a look at the YM and check out how weak it is compared to some of the others. And it was an early indication that it was dropping. It was already showing quite a bit of weakness off of the Fed day, the retest off of Fed day, and it's already dropped pretty significantly already. It's hit our 24.886 level. That's the midpoint of the key range, which has been a very important fulcrum. And then you have the 24.866 level. That's the FOMC level below. So this is a very important zone. If price can't hold this area, we may be looking at a drop right back into 2400, which is the recent support lows. So this is an area that bulls really want to defend, and a failure to do so will suggest another round of weakness into 24,000. Alright, let's take a look now at crude oil. You'll notice crude here finally got a huge move that the market was expecting, but it happened to the downside. All of these bulls had come in down here to squeeze back above the previous month's low. The idea was to squeeze it back up, and right here Friday they gave out options expiration there on this one, and then boom, big drop happens, stop run day, a huge move right back into the FOMC key level from January, 64.38. That level very important, and today you're actually seeing a little bit of life. You're actually seeing some rejection of the previous lows here, of the previous closing prices. You're seeing some tail at the bottom end of this range. We could be making a move right back to the midpoint of Friday's range, which is still quite a ways above. That midpoint is at 65.69, current last price 64.97. So we still have 70 ticks to get just to that midpoint. That could be a pretty good bounce. Now if you wait for price to pull back, perhaps to VWAP or something like that, that could be an opportunity to get in cheaper ahead of a bounce into perhaps the mid of Friday's session. But this is pretty significant here. I mean, if you look with an oscillator, you may see some divergence as well, and that again could suggest a push back to recent highs and the previous close. The previous close has been the major level to watch. That's 67.10, offered both tests. If this rejection continues to play out the way it does, we may see a return right back to it and right back to the FOMC key level of 66.73. Alright, let's take a look lastly at gold. Here's a look at gold. We're talking about a couple of things. Number one, 1310, very important, and 1290, very important. On this day, we were getting the breakout, and then it failed. So I mentioned that this failure right here suggests that the market still wasn't ready to go up. The bulls had everything they needed. Keep an eye on 1290, 1295, and the stop run finally started to happen. It was straddling 1300 for a while, and eventually we got the move, and it was to the downside. That downside breakthrough 1295, 1290 really intensified, and now we're sitting down here at 1282 near recent lows. So this thing really got defended off the 1310s. It appeared like the bulls were going to win out, and then when they had a shot to squeeze, they failed. 1313 evens was the high, and now we've sold off another leg. So again, the idea here is if price can't reestablish back above value, for example, or back above 1295, we're headed lower into this 1252 level. So 1252 is the next high probability target zone with regards to the key range. In terms of average range, it's about 1260 to 1270, and then we have 1240 as the next major pivot low. So there could be much more weakness here as long as 1295 continues to remain intact. So I would say any bounce into 1295 could be a selling opportunity for a push into 1250. So that could be a play here that plays out over the next week. We'll see how that continues to develop. Alright, that is it for now. Let's see how this continues to play out heading into the new week of trading. Good luck, trade well, and I'll see you soon. Take care.